Amazon is up 4.8% in after-hours trading after the company announced its third quarter 2024 earnings. The company is continuing to see strong growth in its profitability and many of its different business segments. Over the past few months, I have also been saying that I think Amazon is the cheapest of the Magnificent Seven stocks. So in today's video, I want to go through Amazon's earnings, share my thoughts on the updated numbers, and share if I think the stock is still looking cheap today. So with that being said, let's hop right into the video. As always, I went through Amazon's earnings report and I took some screenshots of all of the highlights that I think investors need to know. So let's begin the Daniel Pronk slideshow. So right here, we can see that Amazon's net sales increased by 11% to $159 billion. The North American segment of the business saw 9% year-over-year revenue growth. The international segment was 12%, and AWS saw its sales increase by 19% year over year to $27.5 billion now. Operating income also increased to $17.4 billion, which is up from $11.2 billion last year, which is growth of roughly 50% year over year. North America's operating income came in at $5.7 billion, international operating income was $1.3 billion, whereas last year operating income for this segment was actually negative, and AWS's operating income came in at $10.4 billion, compared with $7 billion last year. So AWS's operating income is growing at a faster rate than the revenue, which ultimately means that AWS's operating margin is continuing to expand, which ultimately is a good thing to see. Moving on, we can see that operating cash flow increased by 57% to $112.7 billion for the trailing 12 months now. Free cash flow also increased to $47.7 billion for the trailing 12 months. So Amazon's operating cash flows are continuing to grow, and if you have been a viewer of my channel for some time, you know that operating cash flow is the main metric that I use for Amazon's business to see how its profitability is actually growing and to value the business. So we're going to take a look at this metric a little bit later on in the video as well. But moving on, here we have Amazon's financial guidance for the fourth quarter of 2024. And here they say that net sales are expected to be between $181.5 and $188.5 billion, which is growth between 7 and 11% for the next quarter. So it seems like Amazon is expecting its revenue to continue growing quite well over the next quarter as well. So now let's move on to the cash flow statement, which is my favorite financial statement to take a look at. And right here we can see that Amazon's operating cash flow came in at $26 billion for the third quarter of 2024 versus $21.2 billion last year in the same quarter. So Amazon is seeing its operating cash flows continue to grow by roughly 20% year over year. Now, for the first 9 months of 2024, Amazon's operating cash flow came in at $70.2 billion versus $42.5 billion for the first 9 months of 2023. Which is an increase of roughly $28 billion or roughly 50% year over year. And then lastly, we can see that the operating cash flow in the trailing 12 months is now sitting at $112.7 billion versus $71.6 billion for the trailing 12 months of Q3 2023. So overall, again, we can see that Amazon's operating cash flows are continuing to hit all-time highs. However, here we can see that Amazon's capital expenditures have nearly doubled year over year in the quarter to $22.6 billion. In the first 9 months of the year, they're now sitting at $55.2 billion versus $38.1 billion. And in the trailing 12 months, they're now basically at $70 billion. So just like Meta, Microsoft, and Google, Amazon is investing a significant amount of money into growing its capital expenditures and ultimately growing its cloud and AI infrastructure. This is really the theme across all of the mega tech companies right now. Their capital expenditures are just exploding, which is causing free cash flow to be suppressed quite a bit. And for that reason, again, I do think that operating cash flows are the best metrics to focus on right now, especially when we are trying to value this business relative to its history. So with that being said, let's continue on to the next screenshot here. And in this screenshot, we can see the revenue, operating expenses, and operating income for AWS. So once again, we can see that AWS's revenue was $27.4 billion for the quarter versus $23 billion last year. This is growth to AWS's revenue of $4.5 billion year over year. However, we can see that its operating expenses only increased by $1 billion year over year. So almost all of this revenue growth became operating income growth for Amazon. And overall, this is why AWS's operating margins are expanding. I do believe its operating margin is now sitting at 38%. So if we just go 10.4 divided by 27.45 really quickly, then yes, we get a 38% operating margin, which means that AWS is a highly profitable business, obviously. Now, what's also interesting is if we take a look at the first 9 months of 2024 versus 2023, we can see that AWS has produced roughly $12 billion more in revenue. However, its operating expenses have only increased by $500 million. So basically, the revenue growth that AWS has seen so far this year has only cost an extra $500 million to produce. And again, this is causing AWS's profitability to absolutely explode. And it's just great to see as an Amazon shareholder. So Amazon's doing a great job there, expanding the margins of the business. All right, now let's move on to the final screenshot that I want to share with you all. And this one is my favorite right here. So here we can see that third-party seller services at Amazon grew by 10% year over year. Advertising services grew by 19%, subscription services grew by 11%, and AWS grew by 19%. Now, why I like this table so much is because Amazon shows us the year-over-year growth rate from quarter to quarter to quarter. So for example, in the fourth quarter of 2023, we can see that third-party seller services grew 19% year over year, and advertising services grew by 26% year over year. Then over the next 4 quarters, we can see that advertising services growth slowed down to 19%, and third-party seller services growth slowed down to 10%. However, if we take a look at AWS, we can see that in the fourth quarter of 2023, it was growing at 13% year over year, and now it has accelerated to 19%. Well, the 19% is actually flat on a quarter over quarter basis. So right now, Amazon's third-party seller services and advertising services revenue growth is starting to slow down. Subscription is remaining flat, and AWS is also remaining flat. However, this table also shows us that Amazon has multiple tens of billions of dollar business segments that are all growing at double-digit growth rates. So Amazon is not just an online store, and it's not just AWS. In fact, third-party seller services is producing about 50% more revenue than AWS. So this is a very diverse business with a lot of different growth drivers, different growth segments. And this is also why I think that Amazon is going to continue growing over the long term, and maybe even at a pretty fast rate, especially its profitability. I would actually not be surprised to see Amazon's profits grow faster than revenue over the next few years as the business overall increases its profit margins, just like we saw AWS is currently doing. But moving on to the next screenshot, this one is Google Cloud versus Microsoft Cloud's revenue growth as of the last quarter. So we can see that Google had a ridiculous year-over-year revenue growth rate to Google Cloud of 35%, which means that Google Cloud's revenue growth is clearly accelerating. Microsoft's cloud revenue came in at 22% year over year, which was kind of flat. Now, if we compare that to AWS growth, we can see that AWS grew by 19.1%, which is the slowest growing of the group. However, it's also worth noting that AWS is the largest cloud provider, so it is kind of natural that the growth rates here are going to be a little bit slower. But overall, in the third quarter of 2023, it does look like Google Cloud took the cake here, and they were the winner for this quarter. Now, this next chart shows us AWS's quarterly revenue and its operating income. And we can clearly see that AWS's quarterly revenue is growing significantly still, and its operating income is also hitting all-time highs. This is great to see, obviously, and I just thought that this chart was very interesting to show as well. So now let's head over to Stock Unlock and take a look at Amazon's valuation today. So this was a $1.96 trillion company before the close today, and the stock is up 4.7% in after-hours trading right now. So in after hours, it is currently worth about $2.052 trillion. Now, as we saw, Amazon did produce $112.7 billion in trailing 12 months operating cash flows, which means the business is now trading for a price to operating cash flow of about 8.2. So now what my next step is to head over to Stock Unlock's freeform tool, and I want to take a look at Amazon's historical average price to operating cash flow ratio to see if it is trading above or below that ratio today. So we go to Amazon's historical price to operating cash flow over the past decade, and we can see that its average has been about 27. And again, today it is trading for about 18.2, which means that it is trading significantly below its historical average price to operating cash flow ratios. Now, if we also zoom out all the way to 2004, we can see that the lowest Amazon's price to operating cash flow has ever been was in January of 2009 at 12.2. The next lowest was right here in 2010, in February of 2010 at 15.8. Now, we can also see that whenever Amazon's price to operating cash flow gets to around 20 historically, the market has come in and bought up the stock. However, that hasn't been the case since about January of 2023, because we can see that Amazon's price to operating cash flow has been under 20 for quite some time now. But I do still think that this stock, when we take a look at its historical price ratios, its future growth, the growth of AWS, its third-party seller services, and all of its different business segments, it does lead me to the conclusion that I do think Amazon is looking cheap in the market today, especially when it is trading below its historical average price to operating cash flow ratios. Now, what we can also do here is put in Google and Microsoft into this chart and take a look at all of these companies' price to operating cash flows today. So Google is currently trading for 21 times operating cash flow, Microsoft is at 27, and Amazon is at 18.7. So relative to all of these companies' operating cash flows, you can actually see that Amazon is currently the cheapest. Now, what's also interesting to me is that over the long term, Microsoft's historical average price to operating cash flow has been 17, so has Google's, but Amazon's has been the highest at 27. However, when we take a look at today, Amazon is now the lowest, Google is the second, and Microsoft is the most expensive by far. So it seems like historically, Amazon has been the most expensive company out of these three. But right now, that has completely shifted, and the market is now the most bearish, at least in terms of operating cash flows and the price of that operating cash flow. The market is the most bearish towards Amazon right now, and therefore it is selling for the lowest price ratio. So what has been normal over the past 20 years is now kind of shifted, and Amazon is now the cheapest stock out of this group. And therefore, that also kind of suggests to me that maybe Amazon is the cheapest out of this group, and maybe even that Google and Microsoft are on the expensive end today, especially Microsoft, because they are trading so much above their historical average price ratios. Basically, when you take a look at every price ratio for those other two companies, they're trading well above their historical averages. And for that reason, I do think that Amazon is still looking like the best buy, in my opinion, out of these three companies. And if I had to buy one today, it would definitely be Amazon, which is already in my portfolio. I'm happy with my allocation, but yeah, I may continue to nibble on this one if the stock price does continue to come down, or if the market opens up and reacts weird tomorrow morning. But that is going to wrap up the video for today, everyone. And if you did enjoy this quick update on Amazon's earnings, then please remember to leave a like on the video. And if you're new here and you want to stick around and see more content like this, then please consider subscribing to my channel as well. You can probably tell, but I do my absolute best to get these videos out as quickly as I possibly can. I can feel myself talking quick right now, but it's just because I want to update you guys as quick as possible. I love talking about stocks. It's literally my passion. I love doing it. And I just want to share that with all of you and share my knowledge, I guess. So if you do appreciate these quick updates, please let me know in the comments, leave a like on the video, yada, yada, yada. And I'll see you guys all tomorrow. I might be covering Meta's earnings tomorrow. But yeah, I'm going to try and get another video out tomorrow. So thank you all again so much for tuning in. As always, I truly do appreciate it. And I guess I will see you all tomorrow.